Hey guys, Omkar here for Simple Snippets. In this tutorial, we are going to look about journal. What is journal and how the transactions are recorded in the journal. So here we start. Journal. First of all, what is journal? Journal is a book of prime entry, that is, all the day-to-day transactions are first recorded in journal, which means any transaction which we have to account in books of accounts, then first it has to go through journal. That is why journal is also known as original entry book. Now what is the format of journal? Here we have some tabular columns and rows. This is how journal looks like. This is the format of journal. First column is column for date, second for particulars, third is for ledger folio. We just write LF. Then next column is for debit in rupees, and the last column is credit rupees. So journal has in totality 5 columns. Let's take an example to know how things are journalized in the journal and to know this format better. Here we take one illustration first. The question asks, journalize the following transaction in the books of Ketan. So first of all, we are solving illustration 1, which is in the books of Ketan. So journal of Messrs. Ketan. In 2009, first transaction took place, that is purchase goods from Nalini on credit rupees 1000. So in date column, here we write in date column 2009 Jan 1st, the transaction is purchase goods from Nalini on credit rupees 1000. So according to the 3 golden rules, we are going to remember each and every golden rule and apply it on here on each and every transaction, and then only we are going to pass the journal entry. So goods are purchased from Nalini. Goods real account, tangible real account coming into the business, hence goods account should be debited. Goods account debit rupees 1000, and it is purchased on credit. We haven't given any cash to Nalini. That is why Nalini to us is creditor, or other way around, she is the giver of goods, and rule of personal account says credit the giver. So we are going to credit Nalini account 1000. Revising this first transaction once again, we'll see we are in the journal of Messrs. Ketan. So we have to think from the mind of Ketan, that if we are Ketan, then how would we record all the transactions in our books? So these transactions, as we have ourselves done the transactions, so in date column we wrote date. In particulars, we have to write goods account debit to Nalini account rupees 1000. The column here ledger folio. Now what is it? Ledger folio is the reference column for each and every account which has reference point in ledger. For example, if goods account is on the 3rd page in the ledger, then we would write here number 3. If Nalini account is on the 5th page of ledger, then we would write here number 5, so on and so forth. But here we are not having ledger, so we are going to keep this column blank. Recording of our first transaction is complete. When the transaction is complete, narration is written below the transaction, which always begins with being. So it's being goods purchased from Nalini on credit. Now second transaction is sold goods to Mr. Sharma on credit 2500. So here we write Jan 2nd. Goods are sold to Sharma. So Sharma is the receiver of goods. So Sharma account debit to goods account, because goods are going out of the business 2500. Here we will write the narration being goods sold to Sharma on credit. If it would have written here sold goods to Mr. Sharma rupees 2500, then also the entry would be same, because when it is said sold goods to Sharma, we will assume that it is obviously on credit, unless and until it is specifically said that it is on cash basis. Now let's take a look on these two transactions. If we see, we have purchased goods in 1st Jan and on 2nd Jan we have sold goods to Sharma. In business there are many transactions of purchases and sale took place, and those of goods. If goods account is only opened by an entrepreneur, then it would be difficult to keep track of purchases, sales, purchase return, sales return. Hence, for simplicity, goods account is further classified into purchase, sales, purchase return, sales return. So, we would make a slight adjustment here to first entry and we would say this as purchases account. So, purchases account is nothing but goods account only, but for reference purpose, it is purchases account we say and not goods account. But in practicality, it is goods account only. Similarly, here we would say sales account. So, first entry would be purchases account debit to Nalini account and second entry would be Sharma account debit to sales account. But when you remember the golden rule, according to golden rule, goods are coming in and going out and hence we are debiting and crediting the goods. That's why on first time while learning the journal, we have wrote goods account, but later on we have made the adjustment to purchases account and sales account. Next time onwards, we will only refer the purchases account and sales account, purchase return account, sales return account and not the goods account. On 3rd Jan, purchased furniture for cash rupees 10,000. Jan 3rd, furniture is purchased, so furniture is coming into the business. Rule of real account applies, furniture account debit, and cash is going out of the business, so to cash account, and the amount is rupees 10,000. Narration would be the same, being furniture purchased. You should note that in narration we are writing the whole question as it is, that is whole transaction as it is without any amount. So that is what narration is all about. From the next transaction onwards, I am not going to write narration. Next transaction is on 4th Jan, received interest rupees 800. Jan 4, interest is received. So cash is coming into the business, cash account debit, and interest is income, nominal account. So interest is credited. Amount is rupees 800. Narration would be the transaction itself. Next transaction is paid salaries rupees 3,500. On Jan 5th, salaries are being paid. Salary is an expense. Expenses comes into nominal account. Rule of nominal account says debit all expenses and losses. So we are going to debit the salary. So salaries account debit 3,500 and cash is going out of the business because salary is paid. So cash real account, rule of real account says credit what goes out. We are going to credit cash 3,500 and narration follows. So that's how we can go on logical basis that how transactions are recorded into the journal based on 3 golden rules which we have already learned in tutorial number 2. Let's take another illustration for our revision. Here we go to illustration number 2. Journalize the following transaction in the books of Mr. Ashok and transactions are given for the month of March 2009. Journal of Messrs. Ashok. So we will pretend that we ourselves is Ashok and Ashok, that is us, carrying out all the transactions and recording the same into the journal. Illustration 2. First transaction is on March 1st, 2009. Mr. Ashok commenced business with rupees 10,000 his own and rupees 5,000 borrowed from his friend Pramod. Here we would see 2 transactions as different. In first, Mr. Ashok has commenced business with rupees 10,000 of his own. So 2009 March 1st, Ashok has commenced business with rupees 10,000. So cash is coming into the business, cash account debit 10,000 and Ashok is proprietor. Proprietor's account is capital account. So we would credit Ashok because he is personal in nature and personal account says credit the giver. So Ashok account is credited with rupees 10,000. But Ashok is only the proprietor and we are in the journal of Mrs. Ashok. We can't write our own name into our journal. So proprietor's own account is known as capital account. That is why we would write here capital account. Similarly, if capital account comes into the debit, we write drawings account. Next, 5,000 borrowed from his friend Pramod. Here also cash is coming into the business, so cash account debit 5,000 to Pramod is giver, so Pramod's account is credited with 5,000. Now here you see cash account is debited and capital account is credited, Pramod account is credited. We could have passed combined entry as cash account debit to capital account to Pramod account. Capital is of 10,000 and Pramod 5,000. So in totality business has received 15,000. This is significance of double entry system of bookkeeping. Debit matches with credit. On 2nd March, opened a current account in the Bank of Maharashtra by depositing rupees 4,000. March 2, bank account is open. So bank is real account and money is coming into the bank. So bank account debit 4,000 and cash is going out of the business. So cash is credited 4,000. On 3rd March, purchased goods worth rupees 3,000 from Anil and Company subject to 2% trade discount. On March 3rd, here goods are purchased from Anil and Company. So we would write purchases account debit. Purchases account is nothing but goods account as we have discussed it already to Anil and Company's account. Now question says subject to trade discount of 2%, which means on rupees 3,000 2% is trade discount. So 3,000 less 2%, which comes to 2,940. This 2% is a trade discount and trade discount is not recorded in the books of accounts. Why? Because while negotiating the transaction itself, this exchange took place and terms have agreed upon. So we would debit purchases with 2,940 and would credit with 2,940 and we are not going to book any discount here. If it would have been cash discount, then we would have debited it or credited it when it is received or paid, but in this case we have received trade discount, we are not going to account trade discount. In narration we would write purchase goods from Anil and Company with trade discount of 2%. Next is on 4th March, credit sales of 4,000 to Mr. Desai. Desai is receiver of goods because we have sold goods to Desai. Personal account, Desai account debit 4,000. 2. Goods are going out of the business. So sales account. Sales account is nothing but goods account which we have already seen 4,000. On 5th March, cash sales of rupees 6,000 to Mr. Kulkarni. March 5th, cash is coming into the business to sales account because goods are going out of the business. Rupees 6,000. On 6th March, purchased furniture costing 4,000, of which furniture of rupees 600 was for residential use of Mr. Ashok. Here, furniture is purchased of rupees 4,000, of which furniture of rupees 600 for residential use, which means furniture of rupees 3,400 was for business use. So we can say that this rupees 600 is nothing but drawings. That is, Ashok is receiving the furniture. Ashok account should be debited here. Here we go with the combined entry. March 6th, furniture is coming into the business. So furniture account debit. Ashok has taken some of the furniture for personal use. So Ashok account would be debited, but Ashok is proprietor. Whenever proprietor's account is debited, it is known as drawings account. So we would write it as drawings account debit. 2. Cash is going out of the business, so cash account. Total cash gone out of the business is 4,000, out of which 3,400 is for business purpose and 600 is for personal purpose. March 7th, received cash from Mr. Desai 3,800 and he was allowed cash discount of rupees 200. March 7th, cash is received, so cash is coming into the business. Cash account debit. If you see, on March 4, we have last entry Desai account debit to sales account of rupees 4000, which means we have to recover from Desai 4000, but we are recovering from Desai 3800 and allowing him cash discount of rupees 200. So discount is an expense for us, or we can say loss for us to be precise. So discount account is debited of 200 to Desai account 4000 because Desai is giver of cash. Moving further, on March 8th, cash purchase of rupees 1000 and paid carriage of rupees 300. March 8th, goods are coming in, so purchases account debit 1000, carriage is an expense, nominal account, carriage account debit 300, and cash is going out of the business, real account, cash account we are going to credit 1300. On 9th March, withdrew from bank rupees 2000 for office use. March 9th, cash is coming into the business, real account, so cash is going to be debited and our bank balance is diminishing, so bank account will be credited rupees 2000. On March 10th, return goods to Anil rupees 100. March 10th, goods going out of the business, so we would write 2 goods, and Anil is receiver, so Anil and company account debit. But if we notice, these goods have been purchased from Anil and company, so we would write this not as goods but purchase return worth rupees 100. On 11th March, paid cash to Anil and company rupees 980, who allowed discount of rupees 20. March 11, Anil and company personal account is receiver of cash, debit 980 rupees to cash account 980 rupees. But here he is allowing us discount also, so we have settled his account not for 980 but for 980 plus the discount which he has allowed, and discount which he has allowed is income for us, so we are going to credit the discount account with rupees 20 and we would be settling his account with 980 plus rupees 20, that is for 1000. On 12th March, received check for rupees 300 in exchange of cash from Raju. March 12th. Now in this case we are giving cash and receiving check. When we will deposit this check into bank, then we would be getting cash. So our entry will come when we will deposit the check and not when we will exchange this. So here on March 12, no entry would come. So we would just write here no entry for our purpose. Moving further, on 13th March, received interest from Messrs Shah and Sons rupees 800. March 13, Shah and Sons account debit. 2. Interest is our income. Interest account rupees 800. On March 14, sale of goods to Kadam rupees 500. March 14, Kadam is receiver of goods. Kadam account debit 500. Goods going out of the business, which is nothing but sales, account credit 500. On 15th March, distributed goods of rupees 500 as free samples. March 15. Here distributing goods as free samples is advertisement, and advertisement is an expense for us, so advertisement account we are going to debit with 500, and goods are nothing but purchases which we have done, so purchases account we are going to credit. So our entry will be advertisement account debit to purchases account, and narration will be being goods distributed as free samples. On March 16, goods of rupees 500 were used by Ashok for his private purposes. Here he is using goods for his private purpose, so proprietor account would be debited and proprietor account when debited it is known as drawings account. So drawings account debit and goods going out of the business which were purchased, so purchases account would be credited rupees 500. Next, on March 17th, paid rupees 400 to Manan on behalf of our creditor Anil and Company. Let us understand this transaction. Anil and Company is our creditor, but we are paying Manan on his behalf. So, in our books, Anil and Company should eliminate, and he would be actually receiver of benefit of this money. So we would debit Anil and Company account, and cash is going out of the business, so we would credit cash with rupees 400. So our entry on 17th March will be Anil and Company account debit to cash account rupees 400, and in narration we would write that we have paid cash to Manan. On 18th March, our debtor Ketan paid our office rent rupees 800. Office rent is an expense for us, but which is paid by our debtor Ketan. So we are going to settle Ketan's account against the rent account, and there is no any actual cash outflow in the transaction for Ashok, that is for us. So our entry will be on March 18th, rent account debit. Rent is an expense for us, nominal account, so it is debited to Ketan account rupees 800. On 19th March, received goods returned by Kadam rupees 100. Goods are returned by our customer, so it is sales return. Goods are coming into the business, so goods account we are going to debit. Sales returns account is nothing but goods account, so sales return account debit to Kadam account, who is giver of goods, hence it is credited by the golden rule of personal account rupees 100. Next, on March 20th, Ashok brought into business sale proceeds of his personal furniture rupees 7,000. So it is nothing but he has sold his personal furniture, received cash rupees 7,000, and he is introducing this cash of rupees 7,000 into the business. So it is nothing but capital introduced in the business. So for business, cash is coming in real account, cash account debit 7,000 to Ashok is the giver, but Ashok is the proprietor, so we would write capital account credit 7,000. March 21st, invested rupees 10,000 in the shares of ABB Company Limited. Investment are nothing but assets to the company, which is real account, so investments are coming into the business, so investment account debit, and cash is going out of the business to cash account 10,000. And in narration we would write that say shares are purchased of ABB Limited. Our last transaction is on 22nd of March, received rupees 360 in full settlement of Kadam dues. If we try to see here, there is a transaction with Mr. Kadam on March 14th of rupees 500. We have sold goods, and on March 19th he has returned goods of 100. So we have to actually recover 500 minus 100, that is 400 from Mr. Kadam. But on March 22nd we have actually received in cash 360 in full settlement of Kadam's account. Kadam account is standing in our books at rupees 400, that is rupees 500 minus 100 sales return. So indirectly we have given him discount of rupees 40. So this is how the transactions are journalized in the books of accounts. That's all guys. Thanks for watching. If you like the video, please give a thumbs up, share it, and don't forget to subscribe to our channel. Peace.